Welcome to This Week in Money. I'm Jim Goddard. Today on This Week in Money, Ross Clark from Chartsandmarkets.com runs down the major markets where some of the indices did hit record highs again this week, but others fell off. Ross takes a look at gold, silver, crude, the U.S. and Canadian dollars, along with Bitcoin. The man who knows everything about the Canadian energy market, Josef Schachter, joins us from Calgary to discuss why he thinks 2026 could be a great year for crude. Joseph examines the geopolitical forces in the energy sector, why Canada might need a northern pipeline if the U.S. invades Venezuela. He also looks at Bitcoin and the Canadian housing sector. Publisher of the VR newsletters, Mark Leibovit, gives us his take on how the markets are behaving. He examines gold, silver, crude, uranium, lithium, cannabis, Bitcoin, and why we should keep an eye on the sky. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from Chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to This Week in Money, and Merry Christmas.
Yes, and up and away once again for most of the markets. It's been one, unbelievable year, a big correction back in April, and, that depending upon the index, that was anywhere from 10 to 20%, and here we sit in the fourth quarter of the year making new highs, and depending upon the index, the movement was away from the Mag 7 for a while, and the Dow, the mid caps, and the unweighted S&P all popping up and holding new highs for the year. While the NASDAQ and the S&P are back and challenging again, but still having trouble popping through on the upside. And even though this is the 24th of December, and the Santa Claus rally typically kicks in the last 2 weeks of the month, we are well into it. It's been a really, good pop. We got some good oversold readings back on the 18th on the NASDAQ and on the S&P, and they've had consecutive upside days. The S&P still sitting shy of what we're looking for as a resistance level. When we look at the monetary side of things and the HYG and the CCC, those are the high yield bond markets. They are still looking heavy in here right now, and the S&P, we're sitting at 69.30. Resistance should be up around 70.20, so it could tack on maybe another 100 points or so here before it gets some pretty big resistance. But for now, Santa is in play, and we'll see how far it goes.
Mm-hmm. What's going on with gold?
The precious metals have just had another one of those great weeks here. The gold market, as of today, we've got upside exhaustion signals in the gold market in both the daily, weekly, and monthly, and we haven't seen this in a long time. Last time was back in April, and that's when we saw the first decent correction. And at this point, it's been just a methodical uptrend, really, as far as gold is concerned this year. So we had the mild correction back in May, June, then an even milder one in October. And here we sit at all-time highs right now. And pullbacks, I've been looking at the short-term moving averages, like the 34-day, which was good support on the last pullback. Probably look for the same type of thing on the next one. The real flyer, though, has been the silver market, and that one's got a trifecta as well there. So we have upside exhaustion in silver for the daily, weekly, and monthly charts. Only this is the 11th time since 1970 on this signal, and from here we can move exponentially still for another week or two. However, as soon as it rolls over, the correction probably pulls back all the way to at least the 20-week moving average. That would be a pretty big break for those who have been into it in the latter part of the move. So it's time to pull up the stops. And we have a technique that we use at this point to recognize when the top is in. It definitely won't pick the high trades, but it will identify that the top is there, and it should be time for the correction. So we'll just sit back and watch for that. I see we did have one listener who was asking about the extent of this move in silver, and was this a record high movement? And I went back and looked at it, and so we're since the breakout in May, we're up about 100%, and from that was that consolidation that we have been pushing through. And then this move has gone from $35 up to just over $70. Well, if we look back historically, this is one of the smallest moves. So if we were to top out right here, it would rank as a pretty poor run as far as silver is concerned. The best ones, throw out 1980, which was really a squeeze by the Hunt brother. But other than that, the runs from breakouts have been typically somewhere between 300 and 600%. So there's tons of room on this one to continue to the upside. Even if it's going to have a correction here in the interim, there's room to go. And the 5-year cycle we've been looking at does have 2026 as an optimum high year for this 5-year cycle. And, there's probably still time left in that one, because here we are just in the last week of December, and it would be early for the major high to be in place at this point.
What's going on with crude?
The crude oil market bounced back pretty well, and the currently sitting around 58 and change. So we bottomed out just under 56 a week ago, and we're back at 58. There's good resistance right in here. The moving averages are showing a lot of overhead, anywhere from 58 up to about to 61 or so. There's been no strong signals to identify a bottom at this point, so we'll just stay with the mindset that maybe this was just a short-term low. We did have a sequential 9, so that was 9 consecutive days with closes below 4 days and earlier. That one occurred about 4 or 5 days ago, so this was a good spot for a bounce, but so far it looks like it's just a bounce. The natural gas had been putting up some pretty good flags a week ago for a potential bottom in there, which we sent out to subscribers, and it's having a better bounce at this point. I think that there's some potential for the nat gas to move to the upside.
What's going on with the U.S. and Canadian dollars?
The U.S. dollar had just a grinding week on the downside. Nothing big. It did get down to 97 and change as of the end of the week. It just doesn't have any upside power right now. The resistance, I would say, the 20 and 50-day moving averages are now showing as overhead resistance. They've got downtrends in them now, so anything up around 98.80 to 99 is about a cap that you'd expect over there. Canadian dollar is just having a fabulous month, up at 73 and change right now. It has been outpacing the crude oil and the CRB commodity index, so that continues to be a positive as far as the dollar is concerned, and we'll look for this to run until there's some negative divergences out there.
Bitcoin. At this time last year, it was worth $7,000 more than it is right now.
Yeah, and it had a fabulous run into May through June, but rolled over at 122,000. Big top that looks like, looking back on it, was a head and shoulders pattern, and definitely it gave us downside projections. We got good capitulation lows in the middle of November. The appropriate bounce was back to 94,000, where it hit the Bollinger Band. So we looked for, from these downside exhaustions, every market's a little different, but as far as Bitcoin's concerned, it had good ongoing characteristics going back to 2015, where from the oversold level, you'd see a bounce back to the Bollinger, which it did, and then you'd drop to the lower Bollinger, which it did. That's now in place, and so the opportunity to create a base is there. We're looking at some short-term moving averages in here, and they haven't crossed to the upside as of yet. And the longer they take, the better this will be. The best lows have happened once the moving averages stay in a negative mode from the point where they, after the retest of the low, which is what we had about 5 days ago. Once you get that retest of the low, you want to see this thing stretch out for anywhere from 15 days or more before the eventual turn to the upside happens, because that's when you get your best upside moves. For now, if they were to pop on the upside right now, I think you could be looking at a limited move in terms of duration. As I say, if we were to take another week or two, then the chances of a decent rally will come into play. We'll watch for the characteristics as we move along here, but for now, it's a time to be on the sideline.
Ross, the best of the season to you, and Merry Christmas.
All the best to everyone.
My guest has been Ross Clark from Chartsandmarkets.com. Find him on X at Charts by Ross. Coming up, Josef Schachter, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. Josef, welcome back to This Week in Money.
Oh, great to be with you. It's nice to have a year-end closing show, and I'm looking forward to it.
I bet you're having a very white Christmas in Calgary.
We are. Another inch and a half of snow, and probably 3-4 before that, but it's minus 17 with wind chill, probably minus 25. So wear your toque or your earmuffs and gloves, and don't touch any metal when you're outside.
Yeah, don't lick any frost.
Yeah, you want your tongue back to eat that turkey dinner.
Any kid who grew up on the prairies had to try it once.
Yeah, I think I got one of my ears where I had to pull it off the metal. It's something near opening, the second door of the house at one point, in my youth. Yeah, not fun.
Yeah, and I remember when I was in grade 2, I ran for the bus, and they said you didn't pull your ear flaps down. It was minus 65 Fahrenheit, wow. And my ears froze solid in that time.
Oh, nasty.
Anyway, people don't understand how cold that is. I said it's like outer space. Gasoline is a jelly. You have to use a blowtorch to warm up your engine and your exhaust system, and then once your car is on, you can't turn it off or all the moisture will freeze and burst your engine and exhaust system.
Well, we got some friends over, and they're going up to Edmonton for the holidays, and they're checking to see if they got the plug for the car, so they can, if they have to leave the car outside, they can plug the car in. I
had a block heater, an oil heater, a battery heater, and an interior heater.
Yeah.
When I lived in Moose Jaw. Anyway, let's talk about something we might be able to influence. What's new at the Schachter Energy Report, and how can our people subscribe to it?
Well, we're really, working away on our issue that's going to come out in early January, which is our Fearless Forecast for 2026. As you know from our work. In January 2025, oil was $79, and we got cautious. We thought there was an inventory build in the States, and demand was sluggish. And then, of course, we ended up getting tariffs. And in April, the stocks had gotten beaten up so bad that we had a table-pounding buy. We have three indicators we watch when the price of oil gets below the economic value, which is, you can get that from the Federal Reserve of Dallas. They have a lot of good charts there. Anything, their break even is about 64 US, and today we're in the 58 range, so it's uneconomic. The second one is when the TSX Energy Index is cheap. It's not right now, so we're thinking we're going to see some weakness in the first month or two of 2026. And the third one is the bullish percentage energy, and that's was as high as 70 or 80. It's in the 50s. And in April, it got down to 0%. So we had all of the indicators all kicking in, and we put out a buy signal then and added some great new names that worked out beautifully for investors. So we're looking now for a little weakness probably in Q1, but then we're looking for prices of the commodity to go higher. And so if people want to subscribe and get access to our information, they can go to www.schachterenergyreport.ca, and right now there's a holiday special, so people can get with the code HOL25, they can save $25 and or $100. So if you guys want to put that in your marketing piece, that would be helpful as well. But the bottom line is we're looking for a much better 2026. We think in Q1 the price of oil will be range bound between 52 and 66 barrels a barrel. So we're 58 today. Q2 we're looking for it to improve and peak over 70, so $62 to $72 a barrel. Q3 is when we start seeing that $70 handle on a sustainable basis, and we're looking for a range of 68 to 78. And then Q4, we think that demand is going to be strong. OPEC will not be able to increase their product offering. Inventories will start going down globally. And the piece we wrote today in our Eye on Energy talked about global inventories, and U.S. commercial stocks are at the low end of the 5-year band. The global inventories are in the middle. The only one that's at the high end is the offshore in tankers, where it's about 300 million barrels above norm, and that's because of course, the shadow fleets, Iran, Russia, and Venezuela. But it's not that many days of supply, and so again, if we're right, there's people out there saying we're going to be $40 or $50 in 2026. We don't think the data supports it, and we think that if we see incremental demand starting in the second half of 2025, that if we end up with $80 oil at the end of the year versus the low 50s at the beginning, it's like the reverse of what we saw this year, 79 at the beginning and mid 50s at the end. We think it's going to be a fabulous year for investors, and so the individuals should be building up their buy lists, and when we get the buy signal, which we'll send out to subscribers, then they can buy names that fit their bill. If they want dividend income, or if they want capital gain potential, growth stories, we cover a whole bunch of different names that can fit that and provide great opportunities for investors, and we can talk about that as we're having our chat today.
You'll be speaking in Vancouver in February at the World Outlook Financial Conference. How can our listeners attend?
Well, the World Outlook is February 6th and 7th, so the Friday, Saturday at the Bayshore Hotel. And tickets, I think you can just go to moneytalks.com and you can pick up tickets there. I think it's going to be 1,200 people again, sold out. There's 12 energy companies coming, so they always ask me to refer my best stories to come, and 11 of the 12 are companies we cover and are on our buy list with recommended prices relative to where we are today. And so people should, if they want to meet the companies and chat with them, and there's some big companies like Birchcliff coming, and medium-sized companies, some service companies, one royalty company. So there's a lot of potential names there for people that they would want to go. So if you go to the agenda on the World Outlook page, you'll be able to see all about the conference. And if you own the names or you're interested in the names, a great reason for you to be there. But there's also going to be base metals, precious metals, and of course everybody knows how hot precious metals have been this year. So I think it's going to be a great commodity program. And I think we've seen copper at record highs, we've seen gold, silver at record highs, platinum, palladium, all of those. I think we're going to see energy laggard in 2025 because of tariffs and other reasons. But I think in 2026 it's going to come out of the gate during Q2, and it's going to be a pretty strong performer throughout the year.
West Texas Intermediate crude below $60 a barrel. Is 2026 likely to bring higher or lower oil prices?
Well, let's go through the two cases. The bear case is that inventories are there's a glut of inventories, and as I mentioned earlier, the floating tankers are 300 million barrels more than normal. So that really is the story there for where you have too much supply, and that's where you're seeing people running on the bear side saying that inventories are way higher than they should be. We write up in our report today that the inventories domestic in the States are at the lower end of the band, and then you go into the international numbers and they're on onshore. They're in the middle of the band. Just giving you the numbers, onshore commercial stocks are at 4.4 billion barrels at the lower end of the range of 4.4 to 5.1. Onshore strategic is 1.5 billion. The range has been between 1.35 and 1.6. So, and everybody's trying to build a strategic. The U.S. is, China is. The only inventories that are above normal are offshore on the water inventories, which are 2.3 billion. And the 5-year range is 1.7 to 2, so it's above it by 300. But the total global stocks, when you take onshore, offshore, strategic, are 8 billion barrels, and they're in the middle of the 5-year band of 7.7 to 8.4. So we don't believe there's a glut of inventory, and we think that when we get into Q2, we're going to start seeing inventories come down even more, and we're going to see people wake up to the fact that there's not a glut. You hear some people saying 3 million barrels of excess supply. Well, we were at $54, and then all of a sudden people say, oh, no, we're going to lose Venezuela 1 million barrels. Oh, no. And all of a sudden they're talking about supply shortage. That's totally ignorant. They're not looking at the numbers. Venezuela, produces 900,000 barrels a day. And, if they lose 600,000 barrels a day, that can easily come out of storage. So it's not like we're going to have shortages. And as I mentioned with you at the beginning of our call, you can buy regular gas in Calgary at $1.05 and, $1.20 or 22 or for a premium gas. So prices are down because there is, adequate supplies, and we're in winter, and, at $58, could we see, low 50s in Q1? Yes. If we see, a bit more If the Venezuela thing doesn't get worse, you could see back off in the price from 58. But if you go into the bullish side of the coin, if we start seeing inventories decline from Q2, Q3, and we see economic growth, and you saw that big, 4.3% growth number for Q3 in the States, which was 2 points higher than had forecast, and consumer spending was much higher than expected, then we could see, that move into the 70s and then later in the year into the 80s. And, people don't realize that if you go back and look at the charts, in 2024, we were in the 80s for most of the year. So, I think that, the industry is not making enough money to spend and if you look at the Baker Hughes data, which is the drilling stats, the numbers are down because the industry is not able to make any money at these low prices. So you're seeing the drilling stats come down, and I think that's going to be something that we're going to be seeing, in the first quarter. And I think that sets the stage for a much better, pricing environment in the second half. So I'm in the bull camp, and as I put on the header for this issue, I said WTI heads into year-end 25 down $21 from the start of the year 79. 2026 should see the reverse of this action. So we're saying for people, get your buy list ready. And many stocks are trading at 2 times cash flow, and that's on depressed commodity prices, and at market peaks, which it'll take a couple of years to get to $90 or $100 oil, but they'll trade at 7-8 times cash flow. Many companies are trading at a quarter or a third of their 2P reserve value, trading at PDP reserve, proved developed producing. So there's lots and lots of upside. So it's a question of do you want to nibble now and then take advantage of if we have a pullback in Q1 like we think, and then you get to the fully invested? We've been telling people to be at 80% of their target weight, and then when we get the next buy signal to go to 100% of your target weight. And everybody will be different. Some people will want dividend income, large cap companies. Other people will want growth stories with some dividend. Other people may just want growth. So it depends upon what your portfolio needs. But investors should be looking at energy because I think 2026 it's going to be the year for the sector, and stocks could. My expectation is if we get to 75, 80 in the second half of 2026. We could see stocks 50%, 100% higher than they are today by the end of the year, which is, just think of what happened to the precious metals. Just think about what happened to other sectors, copper and stuff. People couldn't have, at the beginning of 25, wouldn't have expected that kind of performance, and yet that's what they got. And so energy is a laggard, and so energy could really take off and be a fabulous opportunity in 2026.
If the price of crude increases in 2026, is price inflation likely to follow?
Definitely. That's the thing. Right now, the PCE deflator, which came out, I believe was 2.8%. And of course, the target by the Fed is 2%. Most people don't believe we're going to see a change in the Fed funds rate in January. But of course, May, June, they've got a new Fed chairman. And so, again, somebody who's going to pass the litmus test with Trump is going to be willing to be supportive. But there's enough governors on the board there that that he's just one vote, the new guy, and there's 2 of them now that would then be Trump appointees that would be willing to loosen up. But I'd be watching the 2-year rate because that tells you what's going to happen with Fed funds. And then if from the inflation point of view, I'd be watching the 10-year, which is like 4.16. The most recent high in the last few months is like 4.21. So if it goes above 4.21, based on energy being dampened on inflation in 25, being an accelerant to inflation, food prices being an accelerant, wage costs are going up because you're seeing all the job gains because of AI and new factories and all the, everybody bringing manufacturing and construction back to the United States, that's going to be inflationary. You've lost a lot of the low-cost immigrants that have been deported. So I think that inflation is going to wake up in 2026, and that's going to make it hard for the Fed to go down much during the year, maybe 1/4 of a point, maybe, in mid-year, but they could be having to face pressure of rising interest rates by the end of the year.
What's the latest in geopolitical risk for the price of crude?
Well, on the people think about Venezuela, but it's less than 1%. 105 million barrels consumed in 2025. 106 is the forecast for 2026. The industry might be on 500,000 barrels of new production. So we're going to see a decline in inventories in 2026, and so. The geopolitical risks are, Venezuela in terms of losing a little volumes. But the reason I saw price of oil go down to 54 from 60 just a few weeks ago was people talking about, there might be a peace agreement between Russia and Ukraine. And, of course, then Russia would have sanctions removed and they could increase production. I don't think they could increase production more than 500,000 barrels. So the reality is there's not a lot of new production coming on. Demand grows by 1.3 million barrels a year, and it's not in the OECD. It's the emerging world. It's Asia. It's South Korea. It's Vietnam, and other parts of Asia. China's growing, especially with the SPR. And then you take Africa. If we want to have lithium and copper and nickel, aluminum, all these new commodities, they're going to need to, use fossil fuels for transportation, for the infrastructure, for people driving to and from work. So I think that the geopolitical risk is to the upside in 2026. There's three areas I'd be keeping watch for, let's say, the war issue. One would be, Americans landing troops in Venezuela and throwing Maduro out, and the Cubans and the Russians that are there. The second, of course, is, Ukraine. Does the war drag out? And, of course, the Russian winter offensive is on right now. And in return, Ukraine is knocking off generals in downtown Moscow and sending, enormous number of drones into, Russian refineries and things like that. And then I keep an eye on what's going on in, the Taiwan, China area, because if the Americans do a blockade of the oil side of Venezuela, but if they do a full blockade and only allow food and humanitarian aid in and medicine, then you're going to probably see the Chinese say, I can copy that one, and maybe we do a blockade of Taiwan, and nothing goes in, nothing goes out except food and medicine, and all of a sudden the massive Taiwanese semiconductor industry is not going to be able to sell to the world, and NVIDIA and AMD won't be getting their chips, and that could be a geopolitical risk which would have an impact in 2026.
What's the latest on rig data?
Well, the rig data came out, and it's showing that number one, in Canada, of course, we got winter, so the industry shuts down for the holidays to let people have a little bit of a holiday. But the Baker Hughes data for the states showed a decrease of 6 rigs to 542, and that's down from 589 a year ago. And of that, rigs for oil, because of the low price, only 406 and that's down 16% from 483 a year ago. Where there's an increase is natural gas count is up 24.5% to 102 rigs from now at 127. And that, of course, is because of the LNG. Exports are at record highs, almost 18 BCF a day, which is a massive increase. The industry wasn't there a decade ago. And so you're looking at natural gas for NYMEX at $4.25 on MCF US, which is a very nice price for the industry, and they're incentivized to drill. In Canada, there was a 7-rig decrease to 185, and that's because the workers get time off, holidays, and we're going to see that go down over the next 2 weeks and then ramp up in week 2 of January. And so there was drilling for natural gas was up 17.9 to 66 rigs versus 56, and that's again because LNG Canada is moving over a BCF, the new facility in Kitimat, and we're probably going to see one more BCF come on board. It's ramping up now in Q1, Q2, so that'll be 2 BCF a day. That's going to be positive for the Canadian natural gas business. And Canadian AECO, I think I saw was $3.25 today. So it's a much better price than we had months ago when it was like under 50 cents. So the industry is starting to make money. I think we could see, if we have real cold weather, we could see $4, maybe better than that Canadian. And in the States, if they have, we had 167 BCF drawdown for natural gas last week. If we see 250 BCF or more, which you get when you get cold weeks, because the Arctic front goes down to Texas and they don't have much insulation, then you're going to probably see $5 again. And we were up at $5.50 just a few weeks ago when there was a cold spell. So again, if the drawdowns are aggressive, and the comparison, the one thing I'm watching is going back a month or two ago, the inventories were 8% above the 5-year average. Now we're like 0.9%. Once we take below the 5-year average, I think any cold spell is going to take the price up in the States. And if they need and start consuming a lot more Canadian gas, that's going to help prices in Canada, plus the LNG export, and that could make Canada, finally start seeing some decent prices for a reasonable period of time.
Now, we've talked about this before, about why a northern pipeline through BC taking Alberta heavy crude off to the ocean, why that was so important. Can you explain the geopolitics there if the U.S. does invade Venezuela to take over their heavy oil?
Well, the issue for on the Venezuela side is the Americans were running that, and then I believe it was 2005, Chavez nationalized the industry, and Exxon was there, and Chevron, and all the big American companies were there. The only one that stayed working with PDVSA was Chevron. All the others, left the country and took their people away. And so, if there's a change in regime and the Democratic lady who really should have won the election, and the ballot showed that she did, but Chavez, Maduro changed the numbers, then you could see over a couple of years where the American companies go back in, the rule of law comes back in, the nationalized properties are returned, and you could see 2 to 3 million barrels of the capacity of heavy oil come in from Venezuela into the Gulf Coast, where the refineries have been built to handle heavies. Originally, they were handling the Venezuelan heavies and the Mexican heavy crudes, and so if they can increase production by 2 million barrels a day, Canada benefited because we were only like 2.5 million barrels, and we're now producing 6.1. And that big increase was mostly heavies that went in the Midwest and the Gulf Coast. So if the American companies running Venezuela bring their heavy oil into the refineries they own on the Gulf Coast, then the Canadian heavies are going to lose market share, and it means we have a desperate need for takeaway capacity. So you've heard talk about maybe a pipeline to Washington and Oregon. I think that's totally foolish. They're so activist. They're not going to want to allow something like that. Look at the coal. They don't let it go through their coast. They send it up to BC and ship off of the coast of Vancouver. So I think that a pipeline to northern, BC is an issue where there's a demand, but you've got the premier of the province against it. You have First Nations against it. You have the tanker ban on the North Coast. Even if you have carbon capture deal, which is the MOU with the premier and Carney, if they build the carbon capture capabilities and do the emission issues that they're talking about, and the cost of carbon changes to what the feds want, the problem still is that if everybody doesn't join the party on saying, yes, we want it, I don't think it's going to happen. And we're going to end up, the TMX is talking about they can expand a little bit, but it'll take time and big money. Enbridge is talking about 300,000 barrels a day going south. That takes time and money. So we may be going back to more rail, which, of course, is not the smartest thing in the world given the problems and hazards we've had when, derailments. So my view is, we may have 400,000 more of capacity going west, but we may lose 2 million going south, and that's going to put the Canadian heavy oil and oil sands potentially boxed in, where they, even though they may want to grow, they may have to retrench because they cannot move, and it's locked. They have their barrels locked in into the province of Alberta with no place to move it.
Bullish case and bearish case for crude in 2026.
The bullish case is economic recovery, and that the tariff issue gets resolved so that global trade picks up. You've seen the data from China that they were able to replace consumption from the United States. They had a $1 trillion surplus in the first 11 months, bigger than the whole of 2024. So they were able to find markets outside of the U.S. to take on the export markets. So the bullish case is economic growth, tariffs under control, and the need for all these specialty metals, be it rare earths or copper or nickel or aluminum, lithium, and if the world goes into a massive growth phase to bring those on, so we can then have the grid improved, and of course data centers are going to require a lot of copper and more power, so we need to really move on that. The bearish case is if the tariffs don't get resolved, if there is some problem, let's say with China and Taiwan, all of a sudden people get worried and there's slowing economic growth, and then again anything that Trump pulls out of his basket of things that he wants to do that disrupts markets and makes the investment community nervous. Again, the markets don't like anything out of that they're not expecting, and any surprises that are detrimental to corporate profitability and stock market ratios, PE ratios, and growth. That's going to be a disruptive, and that would be the bearish case. I'm in the optimistic case that we're going to have positive, situations, and that the tariffs will get resolved, and global trade will start picking up again. And again, the early signs that I mentioned, China is showing it, Vietnam's picking up, South Korea's picking up, and so we'll just have to wait and be patient and see how things develop. I think Q1, Q2 will tell its story, and if I'm right, we'll get the indicators then.
So far, has tax loss season produced any good buys in oil and gas stocks?
No, they haven't. Because we've had so many takeovers this year. If you take MEG, and you take New Vista, and you take Coetino, and in the service sector you take STEP, the market has been saying who's next, and so stocks have been pretty robust. And people, have been waiting for additional takeovers, which we haven't seen. And so if things quiet down, and if we did see a correction in the U.S. market, the AI bubble bursts to some extent, and the meme stocks get hit, and people start seeing that inflation is picking up, that's going to pull PE ratios down, and that could be, when you see that correction. And that's when you get the buy signal. So stocks are cheap, period, but they could get cheaper, if I'm right, if we have a correction during Q1, and it'll be led by, the overvalued high multiple stocks, which would be the AI semiconductor world. I'd also keep an eye on Bitcoin. It was 120,000 or so at the high, and it's now in the the high 80s. If we saw Bitcoin, break 80,000 something, which was the low in November, that could be a thing where the leveraged speculators, the newbie investors, have gone in and levered themselves up because Bitcoin, for 3 years in a row has, been going up, up, and up. From 20,000 to the 126, I believe, thousand. It's now, 88, 89. If it breaks 80,000, it could plunge, and that could be very painful to new investors. And then they get margin calls, and they have to sell other stuff, and that kind of just, kind of rotates, and all of a sudden you have free fall like we saw in March, April of 2025.
Precious metals continue to hit new highs. What do you see ahead for precious metals in the new year?
Well, part of the reason for precious metals is, of course, people losing faith in the U.S. dollar. Part of it is supply and demand. Demand, especially by central banks, and especially the Chinese and Russian central banks, have been buying gold. Individuals have been buying gold, and silver. Silver is at record highs, above the Hunt's $50 going back decades ago. And so people are looking at it saying as a store of value. They trust it more than they do the U.S. dollar, and so they're looking for places to hide where they can feel that their purchasing power will not be destroyed. And people are talking. You might see from 4,500 in gold, you might see 6,000 in during 2026. Silver, which is I think $70 recently, it could be 100. Again, because the amount of production of gold and silver and platinum, palladium, relative to physical demand, it's not able to meet that, which means the supply that's out there gets, pushed up as more buyers show up than sellers. Just the typical dynamics of a market: more buyers than sellers, higher prices.
Stock markets continue to hit new highs. Could markets continue to see strength in the new year?
I'm not sure about in Q1. I think that if we start seeing companies report year-end results, Q4 results in February, March, and they start talking about the massive expenses they're putting into expenditures into AI, and that they're not seeing the economic benefits, the profits being generated relative to the costs. Everybody wants to say we're doing AI and we're doing this and that because it's sexy and you get paid for it in the stock market. But if you come in and start saying, well, we're paying a lot of money for this and we don't see the benefits, then I think you're going to see some weakness, as I said, in Q1. But I think as we get into Q2, Q3, and economic growth globally shows sustainability, and Trump doesn't do anything crazy on tariffs or anything to disrupt economic growth in 2026, then I think we're off. Then we could see strength in 2026 and maybe new highs. In the Dow, the S&P, but again, the Nasdaq it'll care. They're going to need to see the AI stocks and the semi stocks strengthen after that first quarter correction that I'm looking for. If that's the case, then they could go to new highs. But I would think the Dow could and the S&P 500, but the Nasdaq, as we all know, after 2000 and 2008, it lagged in terms of recovery versus the other two big indexes.
Looks like the housing market's in trouble. Is this likely to cause a decrease in consumption of oil and natural gas?
Well, the housing market is an affordability issue, and with mortgages in the States at 6%, and we're lower in Canada because our interest rates are lower. But it's the affordability and the down payments, and people, it's almost like there's a two-tier economy. The wealthy 1/3 have asset, performance. If they have precious metals, if they have real estate, if they had stocks, all of those things did well. So for the wealthy part of the consumers, they're spending money, they're having a good Christmas, but if you go to the 50% of the people who are in the lower economic levels, they're having affordability problems, food. The healthcare costs are going to be going up in January. The housing problem, jobs, issues, payroll, incomes are not rising faster than the cost of living, food costs. We all know, beef and when you go to the store, beef prices. So I think that if you're in the lower economic groups, you're feeling a very painful time here. But the consumer spending is being led by that 1/3 of the wealthy class. I think the housing market is is at the high end is doing well, at the low end it's not. And I think that, does that impact the oil and gas natural demand? Natural gas more so because of heating. So if there's not a lot of new housing being built, then you're not going to consume more natural gas for housing. But remember, data centers is bigger than that, and the amount of data centers being built and the grid for power, just in general, is growing. So I think in the end, oil and gas will move based on other fundamentals than the housing market.
What's the latest on the AI bubble?
Well, I'm in the camp that you haven't seen the Nasdaq go to a new high. You've seen, look at Nvidia, look at Oracle, and the stocks to me, look tired. And so if they start saying anything on the fundamental side, be it slowdown in orders, or the order book is they're eating into the order book. If there's competitive prices, like you've heard that AMD has new chips that are competitive with the product coming out of Nvidia, and now you're hearing stories that Google's going to have a competitive chip, Amazon's going to have a competitive chip. Well, all of a sudden, that you have more players able to produce high-end chips, and then all of a sudden margin pressure shows up. So I think there's a potential crack in Q1, and I think that could, when that happens, it's going to pull everything down because of intermarket margin pressure, and that's going to provide, from the energy perspective, the ability to buy stocks a bit cheaper than they are today. But I think the meltdown will happen in the AI semiconductor stocks. And I'd be keeping an eye, as I said, watch Oracle, watch Nvidia, watch AMD, and then I think you're going to see that's where you're going to see the damage, and that damage will have repercussions right through the market because of margin calls.
Is Bitcoin looking bearish? Clearly,
yes. And if we break that 80,000, as we talked a few minutes ago, I think you could see 40 or 50,000. There's $20,000 or $30,000 of electricity in to create a Bitcoin. Used to be 10,000 when the price was 15 or 20. So the price of electricity has gone up. But there's a lot of air in it because of speculative juices. And if you watch the ETFs that have Bitcoin, if it breaks 80,000, they're going to be below the cost of what they put into the ETF. That's going to hurt, and if they get redemptions, that's going to hurt. And the companies that have leveraged into Bitcoin, they're going to hurt. So I think that that to me is the canary in the coal mine for the general stock market in Q1.
The Canadian dollar's looking stronger. Is this good for Canada's oil and gas industry?
Well, if we're 72, 73 cents, but I think it's because U.S. interest rates went down, and I think the Canadian dollar strengthened because our exports were better. We were gold and other things were doing well. This is the time of year we ship more natural gas into the States in wintertime, oil as well. So I think that the Canadian dollar is strong here. But if I'm right that we see prices of oil come down in Q1, to 52, 54 versus 58 now, we could go back down to the 70, 71 cent 1.4 exchange rate. But if I'm right that we go to $75 in Q3, Q4, we could see a 75, 78 cent Canadian dollar on the upside. So I think weakness in Q1, strength in Q3, Q4, and a higher dollar at the end of the year than we are today.
Is Canada's economy in trouble, and is the country in decline?
Well, I think you saw the data for October and November. In October, slightly down, November slightly up, but 0.3 down, 0.1 up. So I think we're looking at kind of a flatlining for the Canadian economy. But the key thing is, if we resolve our trade situation with the United States and we start having more exports back into our biggest customer, because it takes time, talking about being an exporter more to Europe or more to Asia, it takes time to do that, the logistics, the finding the customers. So you can't have, just because, the PM Carney says, we're going to sell more to Europe or more to Asia, it doesn't happen immediately. And so I think that we could see, weakness until we see this trade issue resolved. The Prime Minister put one of his friends in to be the new, ambassador to the United States. Trump is still pissed, at Carney, and also the Premier of Ontario. So I think that, until Trump is willing to sit down and the negotiators are able to do something reasonable on steel and on forest products and on all the other issues that are the big barriers right now, I think that, we're not going to see much growth to the U.S., and that means Canadian growth rates will be modest at best.
Is the threat of Alberta's separation real?
There are some, a fringe group that are still frustrated that they don't trust Carney, even though you have that MOU of, to help, build resources. And that MOU is good for BC because it supports mining. It supports Quebec and Newfoundland, Labrador. It supports, Quebec industries and Ontario industries. So, the MOU to grow, they know we're a resource economy, and so we've got to grow, our copper, our forest products, all the industries that the world is going to need. But it takes, time for, that to do it. I'm in the camp that, Carney is realizing that, for example, as I talked to you about heavy oil a little while ago, that we could lose 2 million barrels of exports to the States if the Americans bring in Venezuelan crude after, the new government comes in and they allow the American companies to take back their nationalized assets, and they start recovering them and repairing them and bringing that on, which will take time. And that would mean we in Canada, will lose market share, and we really don't have any place to move it. So, Carney, I think, is realizing that, we need to find new markets for energy and natural gas. I think we've got everybody on side for more LNG on the West Coast, 6 to 7 BCF, by the end of the decade, which would be, 30% growth from the 18 BCF of today, which would be very positive. But oil, I think the gross numbers where people say, we're 6.1, 6.2, that could go to 8 million a day. I'm cynical about that. I think we may be only 5 million, in 3 or 4 years if Venezuelan crude takes over the American market share that we took from them.
Joseph, where can our listeners follow you and subscribe to the Schachter Energy Report?
Well, they can just go to our website, Schachter.Energyreport.ca, SCHACHTER Energyreport.ca. They can see on the website, what we do, our Eye on Energy, which is the weekly piece I do on the macro. We cover 31 Canadian companies, all the way from big ones like Tourmaline, which is, 640,000 BOEs a day, to small companies, just 2,000 BOEs a day, but good growth prospects. We cover service sector. We cover royalty companies. We're going to be adding new names in the early year because of all the takeovers we've had. So I'm working on one company that'll be introduced in our first report in January, which will be out on January the 15th. And so people can go to the website and become subscribers. And as I mentioned at the start, my marketing person has got a holiday special, HOL 25. So when you go in and subscribe, in the promo code, put HOL 25, and you'll get $100 off the regular price on the annual, which is normally $9.99, and that would be $8.99. So it's a good time for people to become subscribers. We think 2026 is going to be a fabulous year. All you need is one good idea from us that you invest in, and it covers the cost. So we've had a very good year growing our subscriber base, and I think if we're right about the performance of crude oil and natural gas, we're going to have a fabulous year in 2026 for investors on good ideas. And if we have good ideas, we'll have a growth in our subscriber base, and people should be there early. Just think about a year and a half ago, gold stocks. Nobody cared. Gold was running, but the stocks didn't move. And then all of a sudden, the golds moved, silver moved, copper moved, and people saying, wow. Well, I think the wow factor will be there for energy by the end of 2026.
Joseph, thank you so much for taking time out of your very busy schedule to chat with us.
It's my pleasure, and I wish everybody a happy holidays, Merry Christmas, and Happy New Year. And hopefully we all have a much better year, politically and health-wise, and if I'm right, I think it's going to be an exciting year for the investors in Canada. It's been a mixed year, but it can be much better if things all come together as I think they will.
My guest has been Josef Schachter, founder of the Schachter Energy Report. He was speaking to us from Calgary. Coming up, Mark Leibovit, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here, and Merry Christmas to anyone who's listening. And Happy New Year if we don't talk before then.
Mark, what happened or what has happened on the market so far this week?
Well, we posted new record highs in a couple of the indexes, not all. So we got in the S&P, which is widely followed, and also follow the total stock market index, that's ticker symbol VTI, that posted a new high, but we didn't see it in the Russell the last 24 hours, and we didn't see it in the Dow Transports, and we didn't see it in the NASDAQ 100, which has been underperforming the last couple of weeks. So, but the most widely followed index did. So Santa Claus came through, at least for the widely followed S&P and Dow, which is, where we seem to get most of the press. So the expectations were there. And it's also, important to point out that this time of year, that institutional traders and investors tend not to be very active, if at all, in the markets. They take this time off. So generally, any movements you see, particularly to the upside, is what we call retail traders or smaller traders that, I guess have a bullish bias because of Santa Claus and sort of move markets up a bit. We'll see what happens after January 2nd, institutional, investors, traders, funds come back to work, if they're going to continue to move it up or what. So we'll have to wait and see. And we, at that time, of course, we're going to be looking for the January barometer, which was created by Yale Hirsch, an old friend of mine, who very kindly dedicated the 1987 edition of the Stock Traders Almanac to me and a few other guys, calling us the new prognosticators. So that was a great honor. I've told that story before, but the first 5 days of the year, according to Yale, the early warning system in terms of the year at large to see if they're up or down compared to the close on December 31st. And then we wait till the end of the month to get the full January barometer. Is January up in total as compared to December? So the January barometer, has about 70% accuracy. Nothing is 100%. I mean, it seems to work more than it does, but it's an interesting concept, and a lot of it is based on, political details in terms of when Congress comes back now versus where they used to come back to after the holidays and so forth. But there's a tendency for that to be an important indicator. And going beyond that, there tends to be some indigestion sometime during the first quarter of the year. That seems to be a general historical pattern, particularly around the February time frame. Sometimes big sell-offs, sometimes minor corrections. We have Groundhog Day, February 2nd, for example. There tends to be some volatility in and around that date. It has nothing to do with the groundhog. It's just that's a cycle time frame that seems to encompass some volatility in the markets over the years. So, we'll just have to wait and see. But ultimately, it gets down to stock picking and what you're in. Obviously, if you've been in gold and particularly silver, they've done really well this year, spectacularly well, and almost to the exclusion of most other investments when you see what's happened there. And, of course, crypto topped out in August, particularly the big Bitcoin, and it's been experiencing indigestion and choppiness since. And some of it has to do, I believe, with the passage or the expected passage of the Clarity Act in Congress, which still is up in the air, and hopefully it will get settled in the first quarter. So I think that had something to do with it as well. But the important thing is that the Bitcoin generated a bit of a sell signal. It seems to lead the overall market about 6 weeks or so in terms of tops. So the sell-off in the market, we got a little bit of a sell-off that we got in the market. Not much came after the Bitcoin peak, but as far as the S&P is concerned, we were able to bounce back. Bitcoin is just floundering here around the high 80s after topping out at 126,000. So no comment there other than there's still, you got to take a longer term view, and I don't think Bitcoin is dead or crypto is dead by any stretch, but it could be, it's a multi-year type situation. So I'm optimistic overall, but we're getting off a little bit on the tangent now. But I think, it's dead, but it's very tradable, that's for sure. So anyway, the market made new highs, Jim, and made the bulls happy, and Santa Claus came through for us, or at least the small investor came through, making Santa Claus look smart, and we'll see what happens after the 2nd of January.
What's going on with gold and silver?
So, well, I just mentioned this spectacular moves. Gold posted a new high just above that 4,400 level, and silver over $70, $71 an ounce. When it took out that 50, the next big number was 80 on the charts, and you'll hear technical measurements clear up to 200, but that could be multi-months or years away. But you just look at the charts and speculate about what's possible. Little carried away to the upside technically. It sort of reminds me of what they call a parabolic advance on the charts. If you're familiar with the math, it's like a vertical ascent on the right side of the chart. So we're going to experience a correction here at some point. Maybe comes after the first of the year. You just have to wait for, confirmation. I'm not saying to sell your silver, but if you're a trader, if you look at the chart, you can see we're very well extended, and we're certainly due for some pullback. I would think since the big high was around $50 for so many years, and that becomes sort of a support level or potential pullback number. So if we start getting a sell-off, I'd be looking for a pullback back to 50 if we start to see some downside acceleration there. But what's your time frame? I mean, you could have been in silver now for decades and made nothing, and until the last year or so, it was just idle money, or losing money for some. So, I guess timing is everything. Luck has a lot to do with it. And I guess ultimately patience for those who believe that ultimately it would go. I mean, I know people that were buying it 10, 12 years ago and saying, well, it's not doing anything, but I bought it for the kids or the grandkids. Well, that's fine. But if you're a trader, if you're in the market looking for short-term performance and guidance, and, we try to do that here at VR Trader a little bit, that's not our cup of tea. Well, I could say anything eventually is going to go up if you hold it long enough, perhaps, but including real estate and other investments, but metals became hot. So anyway, I'm not a bear. I'm just cautioning that it's awfully extended, and the correction would not surprise me.
What's happening on the crude and natural gas markets?
Oh boy, natural gas. That's been a real doozy here for traders. I mean, the thing just ran up and then, sold off, and now it's starting to bounce again. We're actually long it here because it had a big we were long it, then took a profit virtually at the highs in the recent couple of weeks, and then actually about 10, 12 days ago, and now it's sold off big, so it looked like it hit a little bit of support. It trades in this $3 to $5 range if you look at the chart, so looks like it might bounce back to $4. It's sort of a puzzlement to me because there are a lot of reasons why natural gas should do really well and other reasons why it shouldn't. One of the reasons it should is because of the weather, particularly of a bad winter, but the big reason, which is the more sustainable reason, was the demand for energy that nuclear is hoping will fulfill but hasn't fulfilled yet. So I know big companies like GE Vernova are very big in building natural gas generators and so forth, and anticipation. In fact, we have been receiving orders because the need for energy and natural gas was a relatively quick and cheap way of supplying that. So it would seem to me there's still another run to the upside of natural gas, and it's not over regardless of weather. So looks way cheap to me here, way oversold. And this is, of course, a trading comment because we've had some volatility in it. But if you look at the big picture on it in the last couple years or so, a few years, I mean, it's really cheap compared to where it used to be. So I guess geopolitical, variations, demand for energy on part of the hyperscalers that are looking to build these, energy centers for AI and so forth. That's another variable. So just going to have to watch it. But I'm short-term bullish on it. I think it's oversold here. As far as crude oil is concerned, crude oil, it's interesting. You look at the charts, and sentiment is pretty uniformly negative on crude oil. And, you sort of want it down because it's, when it goes up, it's a tax on consumers, and it takes away from the expectations for lower inflation and so forth. But the charts are sort of telling me that it's way oversold and sort of undervalued in a way. We look at all the commodities that have done well, particularly in the metals and so forth. It seems to me it hasn't been reflected in the crude oil pricing, and I think it's overdone to the downside. I was bearish last year, if you remember. I was looking for the mid-50s and the high 40s, and we got to the mid-50s, and I suppose we could still, have another sell-off, but I sort of got a feeling that there's a bigger rally coming here in crude oil this year. That may be a geopolitical, variation, or just maybe that a repricing of the fact that it's an asset that's way too cheap compared to where it used to be, and also where other commodities are priced now. So we'll see. I'm leaning to the bull side there.
What's happening with uranium?
Uranium came off its highs, and it's correcting sideways. Still bullish overall, but it's still in a big bullish trend. Particularly, I guess the stock you got to follow is Cameco, the Canadian uranium company, but they have other interests. They own a piece of Westinghouse, which creates and produces these nuclear generators and so forth. So they're sort of diversified away from pure uranium in a way, but the demand for uranium is still strong, and uranium index is still overall positive. So depends, are you trading or investing? If you're trading, I would say watch it after the first of the year and see what the charts are. I'm currently not in any uranium play right now. So they had a run, they had a little shakeout, but I'm not really, the only one I would pay attention to is Cameco, and it looks pretty good here. It have corrected from, I think, around 120 down to about 80, and now it's in the mid-90s. So I think it's probably a good hold, overall, based on what's happening in the uranium sphere, the demand for it, and with it's a longer-term play. All these nuclear reactors and all the discussion we've been having, and the hyperscaler discussions. I mean, these projects, a lot of money is being thrown there, but till they're underway, still could be anywhere from 2 to 5 years. So bullish, but you got to decide if you're trading or investing.
Anything happening with lithium? Lithium
has done well. Lithium had a big shakeout. One particular company that produces uranium is ALB, Albernell, I think is the correct pronunciation. Stock was in the 50s and 60s, and now it's 130, and it's come up really nicely, catching up a bit. We had that on the list for a while. There's other lithium companies out there too, a couple of which we also had on our trading list. So looking good. You would think just the opposite, with the tax incentives for Tesla having gone away and the demand for hybrid vehicles, for example. But no, we're getting still a lot of demand for lithium, and we're getting a lot of these cars being built for auto taxiing or robot taxis, for example. Google is building a lot of that. Their Weibo project, which is running all over Phoenix, by the way. You run into a Weibo car just about every block here, and that's the Google test for the robot taxis. Tesla's starting to do that, but I hear they have drivers in the vehicle. But all these vehicles, are running on lithium, or demand for lithium, their EV type vehicles. And that seems to be a booming industry. So that's, that among other reasons is still creating a bullish scenario for the lithium.
Anything going on the cannabis front?
We're on a little bit of a hold here. Donald Trump came out with the comment we spoke about a week ago. The stocks were doing well. They were anticipating the rescheduling to come from the DEA, and then Donald Trump comes out with the executive order, sort of commanding the DEA to reschedule from level 1 down to level 3. And it's funny, what happened is that the stocks had rallied. They were still really cheap, but they came up and rallied really nicely in the weeks ahead of that. And when the announcement hit last week, they sold off. It's like, you buy the rumor, sell the news. So traders sold the news. And I guess part of it is that even though I'm bullish on the sector overall, we have a lot of obstacles ahead of us. Rescheduling it didn't make a lot of people happy, that's for sure. I mean, it's gone on forever. It needed to get done. I can get into a lot of personal stories with relatives and drugs and things that I've had in my life that would make me anti-drug, but I don't see that with cannabis. Anything could be misused. We had prohibition in the 1920s, as you know, in the United States. And what did that do? People still wanted alcohol, and they're still alcoholics anyway. And by banning cannabis, what does that do? They're still going to get it anyway. It's been around 5,000 years. It's legal in Canada, as you know, and many other countries. And it's legal in many U.S. states, about 20 U.S. states. So just a matter of time of just making laws uniform. And I know the senior citizens, particularly in this area around the country, are very accommodative to the CBD benefits. And if you watch the signing of the executive order, it's on my website, Donald Trump signing the executive order rescheduling from 1 to 3, and you see the doctors and the people around him and their testimony regarding the benefits of doing this, I think you can be swayed a little bit. Sure, it can be an entry-level drug, and many things could be misused, but we need to control it. We need to create a unified platform here, both in terms of taxation, in terms of legalization, because it's happening anyway. So we still need stuff to have done. Banking Act has to be passed. There's still issues with, banking if you're in the cannabis business, and we need to clear this up. So anyway, I guess the sell-off came because it was like a sigh of relief that we finally got the first step, but there's still steps ahead of us. We need a national law here in the U.S. like you guys have in Canada. We just have to legalize it nationally and clear the air. And then that would solve the banking and all the other issues. But there are a lot of people who I think are very short-sighted about it, who just assume it's negative, it's a bad drug, it's going to create all kinds of problems, but it's happening anyway. And we need to, create a level playing field here. And I feel it's a little bit of stupidity on their part. It's like saying, let's close all the liquor shops down because, alcoholism is also a disease. Well, there's excess everywhere. Anyway, I'm ranting and raving a little bit. The bottom line is I still think there's opportunity in the cannabis stocks. It's just going to take a little time till a lot of these other obstacles are overcome and they're on the legislative side.
Bitcoin started off the year worth about $93,000. It's about $7,000 less than that now. What's the story there?
Yeah, well, I could ask your advice as well as anyone else. What's going to happen next? I mean, it topped out at 126,000. And as I mentioned a few moments ago, it led the stock market pull back. It seems to be leading the stock market sometimes. And it got overdone. And I think part of it had to do with the pending legislation here. As I mentioned, there's still stuff in front of Congress, and it needs to be cleared up. But the plan on the administration side is the national, crypto reserve and Bitcoin reserve and all this kind of stuff. Because the U.S. government controls billions and billions of dollars of Bitcoin that it's confiscated one way or another. So they're trying to create, nationally government-run funds. So as long as the administration has that viewpoint. Bitcoin still has a future, and even without Bitcoin, there are other cryptos out there that have good commercial uses, and I'm sure you've heard of others out there. particularly XRP, which is one of the favorite other names that are mentioned that would benefit. And it may take time. It may be like a multi-year, evolution. It's not going to just happen overnight for the implementation of these other cryptos, which are involved with banking and transfer of monies and assets and so forth. So it goes well beyond the Bitcoin story. Bitcoin is the most popular favorite name, but there are other cryptos out there that have strong commercial application, which are in the process of being developed. And you can do a little research on that. We have a Bitcoin letter, the blockchain letter, and we talk about that in more detail with some articles. But you have to take, I think, 2, 3, 4 year perspective with those. You can't just assume, they're going to explode to the upside tomorrow. But the trend has been overall up over time in the crypto world. And though there are many people that are against it, there are many that are for it, and more importantly, the U.S. government is behind it now. So, with the Banking Act and all this legislation in Congress supporting it, and like I say, we still have some more legislation that has to go through. I don't know how you could say it's a flash in the pan and forget about it. It's something you got to pay attention to. So anyway, the answer to Bitcoin is technically it sold off from 126,000 to 80, and now it's floundering around in the high 80s. And the charts say you could still get a bounce back toward 100, but it's unclear whether we've hit a big bottom or not. And with the legislation and stuff pending and so forth, my gut feeling is that maybe you'll get more of a rally, but it's not a lasting one, and we'll get another correction. And if we take out the 80,000 level, then we could possibly even see the 60s and or 70s again. So I'm just going to have to wait and watch the chart action and watch what news comes out of Congress.
Anything on the geocosmic front we have to watch out for, apart from Santa zipping through the sky with his reindeer?
The normal stuff. We're sitting right on top of we just passed the winter solstice on the 22nd, the shortest day of the year, but it's also a cycle point that I pay a lot of attention to. We have a full moon coming up on January 3rd. We can watch that. And, more importantly, we still have, other important news out there that could affect the markets. We really didn't address that so much, but I'll briefly summarize for you that are really more important, I think. You've got potential Supreme Court decision out there with regarding to the Trump tariffs. We don't know which way the Supreme Court's going to go. We hope they support the tariffs, because if they say they're illegal, that's going to create a big mess, and we don't know how the stock market's going to respond to that. I could possibly anticipate which way the market's going to see it, bullish or bearish. I don't know. I would think it'd be a little bit bearish, that if the Supreme Court reversed all the tariffs, because not only does a lot of money have to be refunded, it's going to just create a lot of mess, in Washington with regard to the strategies and the negotiations that have gone on with other countries. So this is a big story, and we don't know when that's going to happen. Is it sometime next few days, or is it going to be sometime later in January? So we got to watch the Supreme Court tariff decision. We also have to keep an eye on the Japanese interest rates, Jim. I mean, there are the 10-year yield and the Japanese interest rates are now over 2%. And this is important because for many, many years, we talked about this, that U.S. institutions and investors have been borrowing at very low rates in Japan and taking that money and investing it here in the U.S., and that spread between what they could borrow back a few years ago, which was 0% at one point, is now creeping up over 2%. At some point, it doesn't become a decent strategy. It's called a carry trade strategy, and the unwinding of positions could affect markets and interest rates around the world. So that's important, and whether the Fed can cover up for it by printing more money or whatever, that's to be seen, but that's sort of an uncertainty out there. And we have the Venezuela situation going on. I mean, people, you can be sympathetic or not sympathetic, but the bottom line is it's a bad group of people. They confiscated U.S. assets, Exxon Oil assets, Conoco Oil, Chevron. This is going back, many years. But, it's a criminal country. They confiscated U.S. company-based assets, and we need to get control of that again. And other presidents in this country are just a bunch of wussies, and they just sit on their hands, and they let foreign countries confiscate assets that belong to U.S. companies, and Donald Trump is sort of catching up with that many, many years later. So it's a bad country, bad people, and whether we need to take over the country or, put new people in there, time will tell, but we have embargoes underway, and I think we need to get our assets back. So that's a big story because it affects crude oil prices in the meantime, and has to do with the drug trade as well, as you know. So these are sort of the big stories out there that we sort of have to watch into the new year. And with that, that pretty much winds it up. Again, happy holidays to everyone.
Mark, thank you so much for being on This Week in Money.
Thank you for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRtrader.com. He was speaking to us from Arizona. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Josef Schachter, and Mark Leibovit. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@HoweStreet.com. I'm Jim Goddard. Best of the season. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.